Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, June 12th. We do got just one item here, but it's in subcategory. So that is the Consumer Price Index, also known as CPI. This is an important gauge here because basically shows us the inflation data that's out there on the consumer level. And of late, we've been really kind of watching this to see uh, how inflation's reacting, primarily because the investors are hoping that the Fed will cut rates, but the Fed will be reluctant to cut rates if the uh, inflation data is too high. So this is the headline number, the consumer price index we had back in April, a 0.3% increase, and then in May it only went up 0.1%. So year over year, what that did, it went from 2% down to 1.8%. So it's shrinking a little bit. We've been kind of seeing this trend lately with inflation that prices are coming down a bit. Now, when you strip out the food and energy, this is really what the Fed will look at in terms of the uh, data. They'll want the core CPI, and then they also look at the core PCE, which is the core inflation, is what they really look at, but they look at this as well. Now, this is important primarily because it takes out food and energy, which is a variable that they cannot control, and they want to see what the basis will be. So both months, as you can see here, in April and May, it went up 0.1%. This one went down from 2.1% down to 2%. So right now, the core is showing at 2% inflation data right now. So let's kind of jump ahead here. Headline news: stock market is down. Now, the stocks, obviously, the investors like the inflation coming down because that kind of helps them uh, with the sentiment with the Fed going ahead and hopefully cutting rates here. Now, what's bringing it down is, of course, the U.S.-China trade front here. President Trump, I guess, recently sent out a tweet saying that he's holding the process up and that he basically stated that, I'm saying these verbatim, so to speak, but basis was that China and the U.S. both need a great deal, or otherwise there should be no deal at all, basically. So it feels like the sentiment is that he wants a great deal for both China and for the U.S., or it's not worth having a deal. Now, also going on in Hong Kong, which is kind of disrupting the Asian markets, is there's a huge protest going on there. China recently passed a law that they're going to allow extradition from Hong Kong into China. So this can allow for those who criticize the government to be extradited into the mainland China for jury. And of course, that's not sitting too well with the people of Hong Kong. And there's massive protests going on over there at this moment. So let's see how this is playing out in the bond market. And as you can see, we went back and we got those same charts we were used to use before. So this will help us better gauge with the, showing you guys. I got the stochastic down here, so it makes it a little bit easier for me to show you the bond charts and how they're affected again, what could transpire coming ahead. So as you can see here, we got, this level right here. We're at the 25-day moving average. We're being held up with this stochastic ceiling here. But right now we're up 9 basis points. Not quite enough for a price change for the better, but still it's helping us out here. And as you see down here, stochastics, we're kind of slightly over bought position here. So again, we'll kind of want to watch this, but we do have room here down for it to come back into the normal level. So we should be okay here. Treasuries, we're kind of seeing a range between 207 and the 221 range. Right now we're down about 2 points at 2.12 or 212. Seeing in that range here. As you can see, we've been kind of this sideways pattern here for the most part for about a week here now on treasuries here. So again, right now it's more in the sense that U.S. Treasury, we had some good inflation data. However, there's concerns still with the U.S. and China trade reports. That's prolonging that's kind of hurting the global trade sector out there as well. So in any case, mortgage rates remain unchanged from yesterday. Yesterday's close, we left at 0, so there's no change from the previous day. So again, we're starting with 9, so we can't even couple that with this one to make it better pricing. So today, it's so far rates remain unchanged. All right, folks, have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.